thought I'd let you know because we have been sharing the recording with our other people, other clients who can't log in today, and it's been well received offline. And secondly, I do need to advise you that today is a general advice session, which means that the concepts that we're talking about today are general in nature and shouldn't be relied upon for your personal circumstances. Of course, if there are things that are relevant for you personally, we will take those offline and pick those up with you on an individual basis. So on that front, I might pass over to Mirko and let us provide us with his market update here. But as I said, if you could start putting some thoughts here into the chat room, that'd be much appreciated. And we look forward to a really engaging, interesting session today. Over to you, Mirko.
Thank you, Shane, and thank you all for joining us this afternoon. Always a pleasure to speak to you guys, and I hope you're enjoying the sessions that we're putting on. So just looking at things from a economic perspective, I'll go through some of the numbers that we have for you. One thing our clients are good at is giving us direct feedback, and you know, some of the feedback I'll share this with you has been, Mirko, listening to you talk about numbers is like listening to someone read out the death notices. And I go, yeah, that's a fair point, but the numbers are the numbers and they don't lie. And one thing I do know is when you do read through those death notices, there's plenty of people on that list that would be happy to be in your shoes as opposed to being actually listed in there. But in terms of our numbers and the like, the growth of the virus, whilst it's being curtailed and somewhat contained, there's still some extraordinary numbers coming out there. 2.5 million people actually confirmed cases of coronavirus, and deaths now over 177,000 globally, which is an amazing amount of lives lost. There 74 in Australia. So on that front, it's still the scale of this and the enormity of what's going on is certainly huge, and doesn't seem to be subsiding, that's for sure. In terms of some of the positive things that we've seen coming out in the economy, we've continued to see some positive signs out of China with their economy starting to sort of wind up a little bit again, and you know, return to the factories and the like, which was progressively seen increasing, which has been good because they've sort of been you know, one of the leaders with the outbreak starting there to sort of try and inevitably try and track what could potentially happen in other economies around the world. The exponential growth of the virus when tackled head on seems to work. So the isolation, the social distancing seems to be having an effect. And we spoke about this as well, about it's not actually a solution, it's more of a delay, you know, in terms of, you know, giving us an opportunity for our infrastructure, for our hospitals, for our health medical staff to be able to actually cope with this, because as we know, you know, and one of the negatives, we do not have a vaccine as it stands now. Positive policy responses have continued around the world, and they've been quick, they've been forthcoming. Certainly hasn't been any delays like we saw during the GFC, where we sort of potentially had policy responses that took 12 and 18 months in some cases. We've seen a great deal of policy response, both fiscal and monetary, that's occurred in a short space of time. We've seen lower oil prices, which can be both a win and a negative for the economy. And I'm sure there'll be some questions around that, particularly having seen some negative oil prices all of a sudden appear the other night. Liquidity has improved around markets, and most importantly, with the government intervention, with the Reserve Bank intervention, with central bank intervention around the world, we've seen the credit markets start to normalise a little bit, and those massive spreads that we saw starting to sort of wind back, which is good. You know, some of the negatives that we've seen is we've certainly seen situations where the economy has slowly started opening up, but then the virus rears its ugly head again, and we've got a situation like that in Singapore at the moment, where they started opening things up again, but very quickly the virus can start spreading again. So we have to tread very cautiously on that. Some of the earnings estimates for companies, I think, are starting to be revised a little bit as well. We were perhaps a little bit too quick to think this will be a very short impact, therefore valuations won't be impacted too much. I think we're starting to get a little bit of discussion now about, no, this could potentially be a lot greater impact and a lot longer for company valuation. So we keep an eye on that. And what the biggest negative is obviously that not just Australia, but the world is technically in a recession, and we now need to deal with the implications of that and understand how long that will actually track for. One of the concerns is what are sort of future solutions as well. Central banks, a lot of the powder is now dry. There's limited levers to pull in that respect. So has enough been done to try and sustain the economy? Has enough been done to sort of fuel things for a reversal and for some sort of economic comeback when things return to normal, or as normal as can be? In terms of the markets themselves, I'll share my screen with you guys. So you should be able to see that last week there's a little bit more red than we had green in the markets last week, and as you can see, we've had a couple of down days in a row. Today, as at lunchtime, we were sort of down nearly 1% as well, and similar sort of story in the US, where we had the last couple of days being sort of down 2.5% days. The All Ords in general, this is a graph over the last few months, and again from our lows of 37, we've actually given some of this rebound back. We're down 27 since February 20th over that period of time. The Dow Jones out in the US, similar story. I'm pretty sure that number was minus 18% when we spoke last week. That's down minus 21 since February 20. Still off the lows, but I think one of the points that we were trying to get across last week is that it's very likely that we will, if not continue to test the lows, we'll certainly see the volatility and the market moving in sort of significant numbers, both in the up and down direction in that respect. Now, in terms of what I'd like to quickly discuss with you is sort of from a duration perspective and trying to understand how this all might play out for us, and we're sort of looking at a situation where we've had a recession by lockdown, recession by pulling that, I think I referred to it as a handbrake last time, where we literally sort of said, put the economy to a halt. And we're sort of looking at, how long this will continue, and, will this be months, and how long can the economies actually sustain this level of inactivity, if you like. So just looking at some of the scenarios that have played out, the containment measures have certainly been relatively successful in sort of quashing that exponential growth that we've seen in the virus, particularly in the developed countries, and looking at how does that sort of play out. It looks like, particularly in Australia, that the talk is that there will be very slow opening, closed borders, most likely at an international level for us, and perhaps state by state scenarios where we slowly start opening up. The disaster for us would be that containment is not working, as a secondary option, and we basically all contract the virus, in which case you can forget about all macro scenarios. So that would be the most dire consequences. And one of the things that we're starting to see creep in now is sort of this bit of unrest, amongst the public in terms of the lockdown itself, and a bit of noise, particularly coming, not necessarily out of Australia, but definitely coming out of countries like the US, where the public has now moved on to this situation where they're saying we want to open the economy up, we want to get moving again, and the like, and trying to have this fine balancing act where we're trying to sort of keep the virus under check, but at the same time trying not to destroy our economy. And it leaves us with a bit of a dilemma when it comes down to how we go about that. And when you think about the decision making that has to be made by governments, by the authorities, it's an extraordinarily difficult one now in terms of opening up the tap and opening up the switch to sort of say, okay, we're going to start moving again, whether it's we're sending kids to school, whether we're going back to work, whether we're starting to lift some of the restrictions. So the decisions that are faced by our regulators are huge. And I wanted to share with you a situation that I find quite fascinating. It's a bit of a moral dilemma. And I saw this from the Harvard Justice Review. There's a professor there by the name of Michael Sandel. I had the privilege of actually seeing him live in the US at some stage. And he does these online lectures. If you ever want to have a look at it on YouTube, Google Harvard Social Justice. It's I know we've got a lot of time on our hands and we're watching pointless amounts of Netflix and Stan and all that sort of stuff. This is actually really worthwhile. I really enjoyed it. And it's he's got some of the smartest minds in the country in front of him, and he's posting these moral dilemmas to them, and they're talking this through. So if I can just share my screen again with you. Okay, so this is what our moral dilemma looks like. I'll just make that a little bit smaller so we can see it all. Okay, here we go. Okay, so just imagine that you're the train driver in this situation, right? So you're driving along the train, you're hurtling at the required speed limit, heading towards your destination, and you look up, and to your horror, you see on the tracks where you're heading, there's 5 workers. Well, there's 5 workers that are trying to fix the tracks and do some maintenance. And all of a sudden you realise that this is not a good situation. There is no way on earth that I'm going to be able to stop in time. And then all of a sudden you look over to your right-hand side and you see a side track. And let's assume your steering works fine and you've got the option to do that. And all of a sudden you're faced with this decision of what's the right thing to do. Right? Is it better to turn and kill the single construction worker? Or is it appropriate to stay on course and take out all 5? And when you look at that scenario, and you can put a lot of spins on this as well, you know, what would your decision be slightly different if that was a family member, the single construction worker? So we're looking at this situation, and I'm trying to create an analogy here between what our governments are currently faced with as well, and the notion of, do we start opening up the economy, knowing for sure that there are going to be some workers on those tracks that are going to be unfortunately killed in this instance because they're going to contract the virus, versus having the economy up and going again and not, you know, disappearing into oblivion. And it's this type of scenario that I'd like to sort of, you know, put forward to you guys, and I'd be very interested as part of the chat room if you could sort of answer the question: do you turn the train and take out 1, or do you take out all 5? What's the correct thing to do in that scenario? So very interested in how governments actually tackle this problem that we have, this moral dilemma. And we know that the economy itself can only sustain itself for so long in complete shutdown. And at some point in time, we're going to have to make some of these very difficult decisions. So I'll leave you with that thought. I'll be very interested to hear some of your feedback. Over to you, Shane.
Thank you, Mirko, and I look forward to hearing your feedback as well. And that I think we've already started to see a little bit of this starting to take place in the US, with Donald Trump almost encouraging the American citizens to get out and live their lives. But whilst you ponder that, I thought I might just pick up on a few things you said there and a few questions that are coming through to the chat room. And if I can ask, please keep sending those questions through the chat room. We've had lots of comments already. But I thought we might just pick up the first question we started with there around the Qantas and Virgin scenario. I think we talked about this at length last week, and the room was interesting in that it was split probably down the middle about whether the government should or shouldn't bail out Virgin Australia. And I guess now we've had the benefit of seeing what the government's actually done, and they've let them go to their own devices. Now, if the same scenario was posed to Qantas, we've got a bit of a scenario here floating through the chat room: is should the government bail out Qantas, being an Australian business, as compared to Virgin Australia, who is not Australian business? And if they should we start to think about using the public money to invest in Qantas, or actually lend them the money? So some comments coming through here have been that we should extend some support to Qantas, but only enough to keep them afloat. Some people have thought that maybe we should actually invest in Qantas as a nation, particularly given that we're only going to potentially have one airline. But I thought, whilst some more comments are coming through here, can I ask Luke or Mirko, either of you, Virgin have gone into administration, and I suppose one of the questions that struck my kitchen table last night was, what does that actually mean? Does administration mean that Virgin doesn't come back again and they're now insolvent and they're gone? Or what actually happens in administration? Do one of you guys want to pick that up and
Sure.
share with what administration means?
Yeah, sure. Hi guys, how are we all? Look, administration, I guess, is an opportunity for the company to reset. It's an opportunity for the company to reassess their leasehold agreements, their debt arrangements, in terms of their ongoing obligations, in terms of what they've promised. And so what administration allows them to do is probably just to re-look at all those things and recast and look at those less efficient areas of their business, which they may decide to then therefore close down and actually then focus on the real good parts of the business. The risk with administration, I think, from that point of view, and I think administration is a good thing in Virgin's case, and I think Virgin will survive beyond this crisis, for what it's worth. I think Australia desperately needs two airlines. I think the government was right not to support Virgin. I think the government leaving it to the private market is probably the right way to do it. In saying that, however, I think the risk that we run with administration is that Virgin could make some decisions that it will only do profitable routes. So flying the Melbourne to Sydney leg, for example, is extraordinarily profitable, and they may continue to do that. But flying the Melbourne to Byron leg or flying the Melbourne to Gladstone leg, they may not do. So that may have unintended consequences for regional Australia. And this is probably where the government will probably need to get involved in that regard. But I guess from an admin point of view, it doesn't mean that the company won't exist. It doesn't mean that the company's gone broke. It just essentially gives the company an opportunity to breathe, to reset, and then come back to market, hopefully with a new buyer. Obviously, in the absence of a new buyer, then obviously that all falls over.
Yeah, it's going to be interesting, isn't it? I think how it plays out, and I think if I can expand on that a little bit, Jens, is that we were having a discussion before about the expectation of governments and what their role is, and I think if anything, what we're starting to see a bit of a trend around the world. The governments are kind of stepping in and trying to do as much as they physically can, but at what point should they stop? Mirko, do you want to share some thoughts from your end, in terms of the sort of philosophical view about whether we should allow companies to, the idea of sink or swim, or should we just have this expectation of bailout? And I think the government's decision to not bail out Virgin was a pretty telling sign from their end, in that, perhaps if they don't open the floodgates, this may be their way of sort of starting the opening up the debate more so about that they aren't going to be everyone's saviour. What are your thoughts on that, Mirko?
Yeah, definitely no right or wrong answer here, but sometimes it's also a question of be careful what you wish for as well. You end up with government involvement in all aspects and all assets, and at what point in time does it stop? We mentioned last week this interesting notion of, for the first time, as either a landlord or as a tenant, that you've now got the government sort of saying, oh, these are the things that are possible. Maybe you don't need to pay your rent, or perhaps you can come to some sort of agreement, and all of a sudden the market forces that used to determine this are no longer the only thing at play here. The Virgin one is a huge call for the government to say, no, at this point in time, we're not going to get involved in this, knowing well that there's 16,000 odd jobs at stake as well. So the decisions that are being made are quite huge. I think of this at a broader level as well. And one of the things that I find has seemed to have crept into our lives, and particularly the younger generation, is this notion of someone will always fix up the mess and clean things up for me. It doesn't matter what happens, mum or dad will cut a check, or someone will come and be the saving grace. And I can't help think that we're starting to have this type of, thought process throughout our entire economy and throughout our entire lives, sort of thinking, doesn't matter what happens, the government will be there as the backstop. But that used to be the case, that we would always say, well, Social Security is the backstop. There's always, the solution. If people don't have any money, there'll be Social Security and the like. But at some point in time, the government simply cannot afford to be involved in everything. And what does it do to all the economic principles that we know and all the market forces that we've learned to sort of make our business decisions based on? is that somewhat out the window when now all of a sudden it's not any of the fundamentals that drive the decision making, that drive the outcomes? It's actually forces at play that never used to be in play. It's a bit like financial markets at the moment. You know, there are moments in time where somebody's Twitter account, for God's sake, is actually determining what happens on the markets for the day. I don't remember learning that in any of my economics lectures, the ones that I did attend at university. You know, it's quite incredible to sort of think that we're having to rethink the whole way that you know, we not just manage portfolios but live our lives as well. That's my thought.
Like, I think it's interesting, Mirko. I mean, there's some great comments coming through here in regards to the ethical scenario that you posed at the start. And I wonder whether or not that same ethical scenario is applicable to more than just simply, do I take out 1 life versus 5 lives? It may even be applied across the board to the Virgin scenario, in that 16,000 jobs is a terrible outcome. But is there a greater good by not actually helping those 16,000 people, sadly? And I think it's a really difficult situation overall. I might just pause for a second. There's some great comments coming through. I just want to give you all a sense of the different views about the ethical scenario particularly. And it seems as though we all do have the similar view that, you know, saving 1 life is better than 5 lives. And if I can just sort of throw that out further and, you know, kind of put that into the context of the virus that we're living in.
Shane, you might want to reframe that, saving 5 as opposed to 1. I think it's probably, yeah. Swap it around.
He's always thinking differently.
I'm a strange fellow. I've always said that. So thanks for getting me there. But I mean, if you think about this more broadly, right? I mean, this we put that in the context of the virus, and I think, Mirko, your point's pertinent, is that at some point we're going to face this scenario in terms of, and we're seeing it firsthand in America, as to what is acceptable for the government to do. And I don't think there is any winners on that front. But if I keep those comments coming through, and we'll pick them up. Luke, do you want to add anything further to that?
Yeah, what I'd like to, I think we need to just think about where we're currently at this moment in time, and think about what the lockdown and what all the government efforts up until now have meant. And in theory, I think for a lot of people, the lockdown has been seen as a solution, or as this is how we're going to get out of the mess, so to speak. And the lockdown was never designed to be a solution. It was just really designed to buy time, I think. And that's probably the reality of what's coming through. I think Dr. Lowe yesterday, in terms of the Reserve Bank, or the Australian Federal Reserve Bank, in his speech yesterday was pretty clear, where he pretty much outlined that we're going to have a really tough quarter coming up. And I think what we're trying to do is we're trying to avoid that tough quarter, or trying to avoid having that discussion around what that looks like. And the reality is, you know, the government's made decisions around saving 5 as opposed to 1, I think, from that point of view. And I think, you know, in theory, I know in terms of my moral constitution, that sits right. In terms of my economic constitution, I do worry about what that means from a broader impact from that point of view. But I think, you know, in reference to what Mirko said, one of the things that has always bothered me is that when I went to school many years ago with Enzo de Toro back in economics in year 10, year 11, when my passion for numbers was first, I guess, ignited, one of the things there was that we would always have a recession every 5 to 7 years. And the economy would go through a natural downswing. And it was actually a good thing. It was quite healthy. And since 1993, we haven't had one of those here in Australia. We've refused to have a recession, and it's been a moral, it's been like a medal that you could wear on your chest by saying we've never had one. And I guess that probably the unintended consequence of that is that by not having those things, we're not accustomed to it. And all of a sudden, these kind of things frighten us a lot. So I think the challenge that we've got as people is that we've got to win ourselves away from what we've become accustomed to, and understand that this current environment is actually the new normal. And the new normal is going to be frightening at times. We'll get out of it, no doubt, but it's going to be frightening at times. So we just need to be aware of that, I think.
Indeed, it's certainly the unknown is always the thing that we fear the most, I think, isn't it? If I can just, there's been some good comments coming through. I just want to pick up a slight change of direction for a moment. In the last week or so, one of the more topical things that we're starting to see is the oil price. And, you know, again, you guys are both pointed to the fact that economics school at university, I'm sure, didn't cover the fact that an oil price of a barrel of oil would be a negative price. And yesterday it was. So, Mirko, can I perhaps flick over to you for a moment to share some views about the oil price and what your views are around the future of oil?
Yeah, thanks for that, Shane. Yeah, no
Sorry to
problem.
throw you on the bus.
Explain negative commodity prices. Nice work. Look, I'm trying to think back to the scenario when we said we'll never have negative interest rates. Don't be stupid. That's ridiculous. And guess what? We got negative interest rates, and there was very much a similar thought around commodity prices, and in fact oil. Now, oil's one of the largest traded commodities in the world. And the way that this has come about has been, we spoke about, I think it would have been the first or second session that we did, where we've got this real issue with oversupply at the moment, which has been driving the price down. Now, the oil works on futures contracts and derivatives, right? So it's all based around short-term futures contracts that have expiry dates. And what we saw the other day is an expiry date that was pending. And unlike a lot of other futures contracts, people actually trade this for the physical product. So you've got massive refineries that are actually not just wanting to trade the movement of prices, they're actually wanting to trade to fix in a buy price for their oil. And the problem that we've got at the moment is that there is no demand for the oil. Because the world is in such a lockdown, we actually don't need it. A lot of these refineries are at complete full capacity. Their tanks are full. There's no room for them to actually take the physical product. So all of a sudden, if I'm in that situation and I'm holding onto this contract that sort of says, Mirko, you have to take delivery of this oil because you agreed to this price, and I'm sitting there going, no, I would rather pay to not take delivery of this oil. And that's how you end up with this negative price, where people are willing to pay to remove themselves from the contract rather than take the delivery. The airlines trade in oil futures as well. And, as we know, most of the airlines are currently grounded or at very limited capacity because of the reduced travel. So we have had this unique situation. But if you look out to, the longer term contracts, the numbers are positive in terms of what the oil price is. However, they're still very subdued and very low. And I know a lot of people are saying, does this mean that I'll get paid to put petrol in my car? Yeah, fat chance. It's not going to happen. I wish it worked that way. And I still, for the life of me, given the price of oil, given the exchange rates and everything, don't understand why we're paying 90 cents per litre. That makes no sense apart from, we're being ripped off at the Bowser.
Well, it's pleasing that it's 90 cents per litre. 96 cents, I think I saw this morning in Melbourne, but Sydney is still running $1.06. So we have got one up on our New South Wales friends at this point in time from a petrol point of view. Not that we need it at this stage. So look, if I could just move forward a little bit, we've had some great comments coming through, and I just wanted to perhaps shift our attention to this proposal from the government about the app that has been put out there in regards to tracking our movements. And a few of us haven't kind of got quite across it just yet, but basically what the app is designed, I believe, it's conceptual thought to sort of track our movements and see who we've been in contact with in case there is a coronavirus outbreak or we're infected with the virus. Can I get a pulse check from everyone in the audience as to, quick yes or no, whether you'd be happy to download the app and use it? And I suppose that the link that we're trying to work on here about this app is that, we talked about last week, and there's been a bit of a theme coming through our discussion so far, is how do we actually get out of this predicament? And I think one of the parts about the app is to try and, kind of get around the viruses and try and, sort of stop them in their tracks. Luke, we were talking before about, the pathway forward. Has anything changed, you think, in the last week or so? Have you seen anything that you think has been obvious, an obvious step forward in terms of how we get forward from this sort of scenario, the three sort of scenarios that we're talking through about this Great Depression versus a V-shaped recovery or muddling our way through? Has there been any further developments, and is this app one of those steps, do you think, to try and give us a pathway forward?
Yeah, look, without question. I think what we've seen, and I remember our first pulse, one of the first things we said we wanted to see was a reduction in numbers or a reduction in infections, and we wanted to see the flattening of the curve and so on. And we're at that point now where we're starting to see, you know, one case in Victoria, I think, the other night and so on. So we're starting to see the numbers reduce and recede. So we're starting to see those changes, which are a positive. I think the app is instrumental in this whole process. And what I mean by that is I'm the first not to want my privacy out there. Not that I've got Barnaby Joyce issues, but you know, I'm feeling okay about my own personal stuff. But I don't like the government knowing where I am and what I'm doing. But the app is not designed to know where I am and what I'm doing. The app is really designed to know where I was. So in the event that I come across somebody who was infected and I was within 1.5 metres, by having access to that app, the government will be able to contact me to let me know that obviously I should get tested. And the advantage of me getting tested is obviously that I can actually let my family and friends know and so on. One thing that is fundamentally clear is if we want to get out of this, and if we want to get out of this sooner, and we talk about the 11th of May being a big date for us, one of the things that we've got to think about is if we have more tracing, if we're able to do this, and if we're able to keep our borders shut, and I think that's another thing that we've seen emerge in the last week or so from a discussion point of view. The government is talking about travel or having restricted travel, and there might be a bubble created between Australia and New Zealand. So international travel might be limited to that from that point of view. But you know, if we can start to do those sort of things, the sooner we can move to what is technically a more normal life. As to whether or not it'll ever be normal like what we were accustomed to pre-crisis, I'm not necessarily sure about that. But look, I think the app in my world and in terms of what I've seen in the last week, this app is absolutely vital if we want to get out, but it actually requires everybody or the majority to upload it. I think the challenge for the government is, given they've not done a great job on the MyGov account, given that they've failed with NBN, and given that every time they've touched anything to do with technology, they've absolutely killed it. And Senator Roberts, who is the Minister for, I think, Technology or IT, he's an absolute lightweight. So I wouldn't be trusting him with a feather duster, let alone anything else. Until they can get those sort of things resolved, I think there's going to be a lot of people saying, yeah, thanks, but no thanks.
Yeah, it's interesting, and I guess to give everyone a sense of the vibe of the audience here is, I'd say it's about 80% in favour of the app, and about 20% saying definitely not the government. And I did like one of the comments here that says that Google are already tracking us anyway, and I'm sure you've all noticed when you jump in your car in the morning, your phone pipes up and says it's 33 minutes to your normal destination. So the fact they're already tracking us, I dare say the data's already out there. But I thought that was a good observation in the chat room. Now,
just in saying that, Shane, it's important too. The app is not designed to increase your safety. The app is really designed to just keep you informed and aware of what's going on. So, for example, if you, and I've read articles, I guess, from people where they've said, oh, the app will provide safety and provide security. It won't do any of those things. All it'll do is just keep you aware if you've been in touch with somebody who has been exposed or who has the virus from that point of view, that the government will be able to get in touch with you and let you know that you've actually been exposed and that you should go and get tested, and then invariably that sets off ramifications for everything else. So I think the narrative around that app needs to be rebuilt or represented. I think there's an issue there.
That's a good point, Luke. Someone actually made the comment here that the app will it could potentially become a false sense of safety, and I agree. It's definitely not designed to do that. No. I think one of the things that it is designed to do is speed things up, though, right? So the data is powerful, and if you think about what's we personally know a client that suffered through the coronavirus as a result of an international trip, and when you get the feedback as to what the health authorities had to do manually to try and track all the people that potentially were infected, it's just incredibly difficult. And my thoughts are that if we have got the data and the ability to do that quicker, it's just going to mean that we can stop that exponential spread, or at least slow it down a hell of a lot more and be on top of it quicker.
I did, and I think if we can kind of move forward in terms of some of the next steps that happen there. Luke, you mentioned before about the May the 11th in your comments there. I think May the 11th for so many is an interesting date because I you know, as Wade's been positioned, that's our next real date of stage 3 and whether or not that continues going forward. And I guess stage 3 means different things to different people. For business owners and the like, stage 3 would hopefully is a chance for their businesses to open up and start operating, whereas others who are in a different situation feel as though there could be a risk to their health. Luke, you were talking before about you know, the comments of Dr. Lowe yesterday about the September quarter, and he was quite, I wouldn't say optimistic, but he did make some interesting observations that September quarter might be a positive quarter on the back of what's likely, to Mirko's earlier point, a really hard and difficult next 3 months. Why do you think in May 11th, what would we like to see, I suppose, putting aside just purely putting to the context of purely economics, and putting this ethical dilemma to the side for a moment, what sort of economic decisions do we think we need to see on May the 11th to try and help that September quarter flow through?
I think what we need to see, we need to start to see freedom of movement, and I think we need to start to see a lot of the financial stimuli that has been provided to individuals, be it in the form of job seeker, be it in the form of job keeper, or be it in the once-off payment stimuluses and so on. We'd like to see that money deployed into the economy and spent. That's what we'd like to see. What we would also like to do is like to start to see some businesses who are currently unable to work to return back to work. That's probably more in a retail sense, where obviously aspects of social distancing can be adhered to and managed actively. I think the issue that we're going to have for a while is that when we look at things like hospitality, when we look at things like sport, you know, or personal healthcare and stuff like that, they're going to take a bit longer, I think, from that point of view. But what we're going to start to see is we're going to start to see some businesses re-emerge and hopefully turn on the lights a bit sooner than what they thought. I would like Daniel Andrews to stop lecturing, however. He's starting to annoy the crap out of me, in truth. So if he stopped lecturing and just kept an even keel, that would be a lot better, I think, for everybody. That's just a view.
I would echo that thought. I felt like a prep the other day when I was being told about a few things, but I think for what, as we've said many times, I mean, I wouldn't envy the government at all at this point in time, either the state or the federal government. They're playing with such a difficult situation. Now, I was going to pause for a moment and just give you everyone a bit of a view on what's coming through the chat room here. There's some interesting thoughts about the vaccine and that, you know, SARS and MERS didn't actually have any solutions, and yet we still live with those as a society, and perhaps the coronavirus may very well be a virus that we do live with going forward. There's two things that I think that I'd also like to pick up on some of the themes that have come through the chat room today, and not in any particular order. But I thought, Mirko, to give you a heads up to have a thought about this, is that we've obviously seen over the last 3 days, you know, a bit of a trend down in the market, which we've had a bit of a respite from falling markets for the last 3 to 4 weeks. And I thought it might be a chance now with some of the comments that's coming through that we might be able to not necessarily speculate or try and think about assets that we'd like to buy opportunistically, or what we should do if we're fearful of the market, but perhaps maybe just a revisit on strategy and preparing for now, like we've talked about a few times. And I think the second part, Luke, and I think this is a great concept to raise, and it's a sensitive topic, but it has been asked in the question, so we don't in the chat room, so we don't want to step away from that. But this ethical dilemma that Mirko posed at the start, the questions that have been coming through, the comments that are coming through, is the other side of the coin is the mental health aspect of everyone else in society, and I think that is it's a bit of a sleeper, sadly, and I dare say, going forward, that's going to be more and more prevalent. So perhaps if we can have a conversation about that, let's do so. But Mirko, can I pass to you first to the question about what we should be doing now in our thought processes, and try and just to revisit before we move to the mental health side of things?
Yeah, I think in terms of what we've seen in the markets, if we go back to our first session that we did when we spoke to clients when markets had come off dramatically, one of the things that we certainly tried to reinforce is this notion of the investment portfolios are structured in the way that they need to be, and that is to ensure that you're not a forced seller of assets, then you have the comfort of knowing that you're not selling something to pay your monthly bills, right? And the stance doesn't change in that respect. Having that sort of, and it's a bit like when we think about, the government talks about liquidity. So we talk about this liquidity required in the macro economic context, liquidity being availability of money and the like. It's no different to our households. So when we think about our own personal circumstances, having the liquidity to sort of say, regardless of what my portfolio is doing, and no one likes to see the portfolio in the red. I hate seeing those red numbers. Right? So there's no. I always think of that oxymoron. And when someone says, "Oh, it was a negative return of 10%," it wasn't a negative return. It was a loss of 10%. You know, so no one likes to see their portfolios come off. However, knowing that you're not selling an asset that's 20, 30% lower at this point in time is the key. So not being that forced seller. So as far as positioning of the portfolio is concerned, I think that now is a time to, again, to revisit that and sort of go, yep, look, portfolios have come off. They have bounced back a little bit, but I'm still not selling assets to try and, you know, maintain my cash flow requirements. That's important. It's important that the portfolios are actively managed, and the rebalancing that occurs inside the portfolios will actually lean towards buying distressed assets or assets that have come off in value. So what we've seen over the last week is we've given back some of the rebounds, you know, and we talked about the mathematical concept of sort of saying, well, if I lose 50% of my money, it's actually 100% return required to get back to where I started from. We're starting to see this notion of, yes, we've rebounded, but we haven't rebounded strong enough, and there's a hell of a lot more that's required. And I think until we start seeing more positive data, and Luke, you talked about this May 11th date, I reckon that, you know, come May 11th, if we do see some of those decisions, the following 2 and 3 weeks of data are going to be critical. People are going to want to see, are we still managing to contain this situation? Are we confident that the economy is going to start being able to sort of, you know, get that wheel effect where, you know, the wheel starts spinning and we're up and going again? So I think we're going to have a few false stop starts here. Let's just hope that we don't have a situation where decisions are made, we open up too quickly, and we find ourselves in a completely difficult situation, being that we have to shut the economy down then, because then I worry about what the impacts would be on a secondary shutdown. So we've sort of learnt to live with the one that we've got now, but if we sort of had 2 steps forward and then had to take 4 or 5 steps backwards, I'd be really concerned about the longer, broader term ramifications. And that, you know, that's my sort of long answer to the sort of volatility that we've seen, particularly in the last week. And I think that as investors were rewarded for staying the course, you know, from the onset of the crisis, I think that you need to come into this with that very tough, resilient mentality to your portfolio.
And I think, Mirko, I think well said there in that regard. And I think if we can add to that a little bit, we've had a number of discussions in these forums about the fact that, you know, we don't know the answers going forward in terms of the markets. We don't, no one really knows the answers. And I always think if anyone speculates or tries to guess, they quickly look a bit foolish longer term. But I think your point there is very valid around preparation and actually staying the course. And I think the last 8 weeks have taught us an awful lot, in that markets have fallen quickly, they've rebounded quickly, and, you know, being on either end of that cycle is really difficult. And one thing that I know observationally breaks my heart is when you see in the news people who are acting in fear, making decisions to exit out of markets really at the wrong point in time. You know, 3 or 4 weeks ago, there was a big exodus of people selling out of their portfolios in the news. And fortunately, the majority of, or nearly everyone that we work with hasn't had that situation. But having said that, those people, it breaks my heart, because the next 3 or 4 weeks they miss out on a rebound, and when they start to feel sensible about investing again, it's probably the wrong time to do so again. So I think, you know, your point there is very valid about having faith to maintain the course. Luke, if we can shift direction a little bit to this, to you know, a very sensitive issue for everyone, the mental health side of things. What are your thoughts around this and observations, and how do we deal with this as a society? Because I actually think this is a topic that may overtake the economic aspect very quickly if we're not too careful about how we move about society these days.
Yeah, look, this is probably the thing that keeps you up at night and you worry about the most, I think. Today, we are blessed, all of us. We live in a wonderful country, and if you're going to be isolated anywhere in the world, you'd like to be isolated in Australia, I would have thought. So we're very lucky. In saying that, however, Australia, on average, loses 8 people a day to suicide. That's just a natural thing that we lose, and of those, 6 are men. So that's a massive number per day. So when you start to add that up every day of the week, and then you add that up every day of the month to obviously 365 days a year, that is a lot of people. So that is frightening. I imagine issues like COVID are going to exacerbate those numbers and cause a spike there. And the biggest concern here is the unintended consequence. So with the view of trying to save one, we're running the risk of hurting other people. With the view of trying to save 5, we're running the risk of hurting other people. And I think it's a bit like the analogy we used last week of trying to land a 380 on a 20-cent coin. But the moral issues that we're facing and the discussions that we're having, and these are really difficult discussions, there's no right or wrong answer. The hard one will be to decide about what's right, what feels right, and what is. But I think from that point of view, one thing that I can suggest, and we've seen it through our own employees, we've seen it through our families at home, people are employed to stay in touch. You've got to stay in touch with the people that are important. You've got to stay in touch with friends. You've got to stay in touch with family. And even with the guys who are probably distant associates, who you may have not spoken to for a while, having a check-in and having a chat via this medium, for example, like Zoom or on the telephone or texting or dropping an email or even the old-fashioned writing a letter. These are really important times for us to reconnect as a human race, I think. Because I think one of the biggest issues, particularly for a lot of people out there, loneliness is already a problem. Now being enforced and dealing with that sort of stuff, I think the ramifications of this could be potentially huge. And the ability to therefore then recover beyond that will be even more harder. So, look, like I said, I think mental health is not a government issue. Mental health is a human being issue. And I think we as individuals all need to play our part in that role.
Yeah, well put, Luke. And it's somebody might wonder why are we talking about mental health in this sort of economic type discussion or forum. I think the reality is that it's very real, and the questions are coming through the chat room about mental health. And one thing that we certainly don't want to do is try and shy away from any questions that are asked or put our way, and hence the reason why it's come up here in the discussion today. So well put, and I think it's something we need to be very mindful of and watch this space.
And I think, Shane, if I could, one of the things that always rings true to me is that we learn a hell of a lot from our clients, as we'd like to think our clients learn from us. And one of the things that we're seeing from our client base is the ramifications of all this and their extended families. And so we know this issue is real, and we know it's affecting the people that are probably online here today. And if it's not affecting them, it's certainly affecting their wider families. So I think to reiterate Luke's point, we can't speak highly enough of the importance of actually making an effort, even with those that aren't so close, but just trying to make an effort to sort of have that human touch, because this is more than just an economic and a health crisis. This is a hell of a lot more than that, and we sort of owe it to the broader community to ensure that we can sort of keep that in check, because that could be one of those secondary consequences that become generational problems if you're not careful.
Absolutely,
definitely. Now we've got a few more minutes until we finish up here. So if anyone has any further questions you would like to ask any of us, please feel free to put them into the chat room here. There is a comment here which is finish with the question mark, poetic justice, and it talks about the guy in the US who called coronavirus fake news, has now contracted the virus and unfortunately passed away. So I think that's kind of one of those points in time where the virus is very real, and I think if I can kind of wrap up the sentiment of today's discussion is that we've seen a very sort of topsy-turvy week on the investment markets. We've seen a bit more things come out from the government in terms of how they're trying to deal with this. We're seeing, a shift into this ethical conundrum about how do we actually move forward as an economy. And I say thank you for raising it, Mirko, because I think it's one of those points that we can't actually move forward as an economy, I don't feel, without actually contemplating that as an ethical scenario, because it's going to be real and it's happening already. So for our part, there aren't any further questions coming through here, but so for our part, I think it's certainly a point in time where we're observing and reflecting on all these aspects, because they all do play a very critical role in formulating our advice to you in terms of businesses, our advice to you in terms of retirees and those who are accumulating wealth. These key aspects do play a critical component of the advice that we give you. So hopefully what you're seeing today is a sense of our seriousness across all those topics. Now, before I wrap up, Mirko or Luke, do you have any further comments you want to conclude with today?
Can I end on something positive so I don't get accused of reading the death notices again, please? Victorians are saving $38 million a day by not putting them through the poker machines, which by my math is over $1 billion. I think that's fantastic. There's always something good to come out of this stuff.
Yeah, indeed.
Look, from my end, it's pretty brief. I think we're another week down and another week closer to an outcome. And that outcome will actually be a good outcome in time. We're going to have to make some pretty stern and serious decisions, but the fact that we're brave enough to have a conversation bodes well for the future, I think. So stay strong, guys. Be healthy, be well, and keep on smiling, all of you, please. And make sure you're well by chat. Cheers.
Thank you, Luke, and thanks, Mirko. And in conclusion, thank you everyone for dialing in today. We hope you found the discussion very raw, as it always is in our business, and we hope you found it to be useful and beneficial in your own thinking process. We look forward to having you all dial in again next Wednesday. And between now and then, if you have any questions, please don't hesitate to contact anyone here in the business. We're absolutely here to help. And we're doing our absolute best to make sure we help navigate you through all this economic and stress that we're experiencing today. So on that note, take care and stay safe, and we'll see you again next week. Bye for now.
Cheers. Thank you. Have a great week.